Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts.
So another example here you can see was pretty much of a trading range for the British pound. And we mentioned through that period from March '07 to March '08, British pound, dollar against British pound, the BPX is a symbol here, was basically stuck in an overall one-year range. But you can see even there we had a nice trend. Where's the nice trend hitting? Well, the first one does not follow through. We get an attempted follow through, but it doesn't close above there. And if it comes back under that 80 threshold without falling through, I just turn the signal off right there in early December because it did not give us a follow through. So what do? I wait for the next time that it follows through, which is on this gap up happening here, and you can see then 2 bars later it's going to close above that high. That's bull confirmed, ready to roll, and then look at what happens. Even if you miss that first move, you get a retest. And look at what happens the next 2 bars after that late December retest right back into the 80 line. Next 2 bars during the day, it's below that closing stop level. But look at what happens by the end of the day. Those green candles mean it closed up above where it opened. So you don't get stopped out there like the rest of the crowd. You're able to ride for the next move. That's where the closing stop really, really helps. You can see when it finally does end, when we break under that 80 threshold, well, yes, then if it violates that on the close with this next red candle closing below there, we got to get out there on just under that 50-50 mark compared to the buy signal that was happening back about the 49.60 mark. That doesn't seem like a lot, but again, the beauty is that these options are priced relatively cheaply for these lower volatility kind of situations like the dollar versus British pound was, and so from that perspective, you can be buying relatively cheap options, and even a moderate acceleration move like this will catch a meaningful profit when you catch it like you did here in December and January. Now, you can see once it wasn't a little bit of a downtrend, and then once it broke back above that prior high on that last chart, and that one happened on a little gap up. That happens sometimes. You got to take that trade out there and say, okay, it's just not doing what it's supposed to be doing. Remember what I said before. If it's doing what it's supposed to be doing, you should be continuing to follow your rules and follow the trend. If it's not doing what you think it should be doing based on your rules, it's time to say bye-bye to the trade. So that's important to keep in mind. And then here's another, the Aussie, U.S. dollar against the Aussie dollar. Remember, this is ticker AUX. This was one that came online earlier this year, and you can see at the ISE, and basically you can see we were stuck in a trading range. You hit the bottom of the range back down here at the lows, but you don't follow through below that. That's where %R helps me to say that's just the bottom of the range unless it follows through under that low. That was indeed a trading range scenario. This one, of course, it gaps up. It's got to break above that high on that bar, and it shoots right back down under the 80 threshold. So you're turning that signal right back off, and you're just saying that's just a trading range move, just a little volatile move. Even though it had 1 bar above the acceleration bands, it's saying you don't mess with it because basically you're seeing not a confirmation happening in your %R indicator. So if you'd like to get a copy of these slides, definitely feel free to go to this link that we set up for you. Hopefully, we've got a few minutes where I can try to share my monitor and look at a few of these charts here real quick. Do we have a few minutes for that, Steve?
Absolutely, Price. Would love to see maybe, whatever you think. If they're too exciting, I don't think there's any, well, I'll leave it to you, but you don't see any bearish ones, do you, where the U.S. dollar looks weak?
Let's see if we can, let's share.
You like, 1 or 2 bearish, 1 or 2 bullish, or something like that. Whatever your opinions are.
Is it share application? I'm just trying to remember what's my best way to go here.
Exactly right.
Okay, share application, and let's do my
desktop
4, and then let's just share that. And tell me if you're seeing this. Are you seeing the EUI here?
It hasn't come through yet.
Okay. Just tell me what. Is it just blank?
It's just a little slow. It's coming through now.
Okay. I've got a lot of different indicators on here, so I'm going to actually take a couple of them off because we look at a lot of different things, but just for the sake of this presentation, I just wanted to focus you on just a couple of them here. and just on kind of a dummy account that we have here through TradeStation. But basically, let's just zoom it in, and what we're going to do is actually we can go plot our acceleration bands.
Price, I just see desktop number 3, but I don't see any chart or anything.
Oh, okay, so we're on the other one. Hold on, let me see if I can copy it over into that window there, Steve. 1 second.
Sure.
Let me do an edit copy. Let's see if I can paste it over here. See if it's coming up now there for you.
Yes, perfect.
Oh, great. Okay. So we've got some Bollinger Bands plotted up here, but what I'm going to do is actually, this has, you can see the 20-day Bollinger in blue, and then what I'll do is I'll just insert the indicator, and we'll insert acceleration bands 20, which is, we've got a number of platforms that you can get these bands on. We'll make our color, let's make our color a different color here. Let's make it, the acceleration bands kind of that fuchsia color. And so you'll see, okay, make that bold a little bit, and we'll be good to go. Okay, so if we do style, there we go. Okay, so our fuchsia color bands are our acceleration bands. This is EUI, remember, the dollar against the euro. It was, EUI was up today, and so basically you can see, okay, we've got the dollar coming back against the euro here. But what are we saying about the acceleration signal here? Today, this bar right here as we speak, on 8.5 is a key bar here that we just got the %R above the 80 threshold, and we got our first bar above the acceleration. If we close above today's high, which was 64.73, while the %R stays above that 80 overbought threshold, that will be bull confirmed. Even though you say, but there's all this resistance overhead up about 65, but the bottom line is that that would be bullish. So what we would typically do is be looking for like an in-the-money option going down a couple of strike prices down into the 63.5, 63, 62.5. You choose, but basically, and going out, a couple months or more, that's usually a better choice. You can look at how many times this thing tried to follow through and failed back here in May, back here in early June, back here in mid-June, all those failures. And so, in contrast, we did have a short-term bearish signal when this followed through on the downside. We had a bear retest right there, right at that high, and notice as we're bumping right up into it over the next couple of days, and then it flips down one more time. Then when it turned back up and closed above there, you're done with that little downtrend. It wasn't a big one, but you can see in this case, right now it's crunch time. But it's right now, in my estimation, it's the top of the range until proven otherwise. I've just got a few more minutes before I have to jump into another coaching class, but I want to show you the other big ones as we talked about CDD. Look at how strong that is in comparison. Let me give you a little perspective. Let's back that out a little bit. You can see that looks even better because you've broken out above the highs. If you're looking for a currency play on the dollar strengthening here recently comparatively, this is the much better choice, CDD. Remember, we just talked about, Steve, how that one had looked so bearish back in November of 07. But bottom line is this one now looks very bullish. Right now, it's gapped up today. I'd prefer to be buying it the next time it comes in for a little retest back into these fuchsia acceleration bands, which are right now about just a little above 103 and starting to tick up, so probably be 103.5 over the next couple of days. But bottom line is this is really a much better place bullishly to focus on a daily chart and wait for that next retest. Even if it's a short-lived trend, you get a snap up like you saw right here for a couple of days, 102 to 103, and in a couple of days you'll get a nice little quick pop in your position.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.